Joining us on the line now is Mr. Grattan Kirk. He's the CEO of the JD Group, which released a sales update today. Thank you so much, Grattan, for joining us. A great set of numbers is what most investors this morning have been talking about, and I suppose many weren't expecting such strong numbers from JD Group. Sales up 11.5% in the 4 months to the middle of January, and we saw the likes of merchandise sales increasing by 25% as well. Let's start off with that merchandise number and where you saw the largest concentration within your divisions.
Thank you very much indeed for your kind comments. On the merchandise sales side at traditional retail, which is our furniture business, our furniture brands, we had a very, very strong Christmas, and our Christmas period runs from mid-November to mid-January. So I guess it'd be fair to say it took us a little bit by surprise too. You know, we were not expecting such an increase, but very satisfying. However, you've got to bear in mind that the 2009 Christmas period, the previous year, was not great for us. So, in terms of the base, we've seen a very strong percentage increase, but the base was quite low.
Clearly off, as you said, off a relatively low base.
Yeah.
Does this mean that we're starting to see a lot of appetite coming through for consumers for credit? We have seen this trend starting to come to the fore. Can we comfortably say that this trend is now intact?
Yeah, since this time last year, so from January 2010, so effectively for the last 11 months, we've seen consistent growth on a month-to-month basis. So I think you can safely say that we are probably through the worst of, from an economy point of view. We've seen a lot of pent-up demand over the last 3 years. We've seen our target market, and we're bearing in mind we are a middle mass market retailer.
Yeah.
We've seen pent-up demand. We've seen a recovery from an employment point of view, and we've seen lowering of interest rates have definitely had an impact on our target market. So encouraging signs for the last 11 months, but a very, very strong Christmas. So that was really encouraging, I must say.
I was chatting to Chris Gilmore a little earlier from ABSA. I hear you giggling there, but
he gives us the hardest time.
he would like to know what exactly were consumers buying this time around? Is it flat screen TVs? Was it just general furniture? What exactly was the trend over this festive season?
Yeah, on the furniture business side, we saw very, very strong demand from the categories lounge, dining room, and bedroom. So those are the three categories we saw very strong demand. And on our electronic side, yes, he's very right. Both audio and TV, and particularly the panel TV market, we've seen nice growth over Christmas. So I mean, people are switching out of what we call a traditional CRT TV into a panel, which is an LCD or plasma screen, and right from our entry-level brands right through to our higher LSM categories, we're very strong demand on. In fact, you can say this across the board, really, from an electronic point of view as well as furniture.
In rand terms, your Polish operations didn't perform so well. We saw a 15% drop in sales, as I mentioned, in rand terms. It seems that you're relatively confident about that Eastern European side of things. I mean, just given the fact that you have been operating there, despite the fact that we have seen weakness. What is it about that part of Europe that attracts you so much? What are your plans going forward?
The original strategy behind having ABRA in Poland was to use that as a springboard into the rest of Eastern Europe, the countries such as Latvia, Lithuania, the Ukraine, Slovakia. That hasn't materialized simply in the last couple of years because those markets have really suffered from an economic downturn. That being said, the Polish economy is the one that's held up the strongest in that region, and the way that business operates, I mean, it is a really, really well-run business. We've got a fantastic management team there. It effectively, runs itself. But the stated original strategy has not manifested itself over the last couple of years. But we're very comfortable with that investment, and it has had the dynamics of the Polish consumer being under pressure. But it's from our point of view, it's a great business, and we continue to invest in it and are very happy with that investment. I think the Polish economy will recover, and from a sales side, we've seen zloty sales under pressure over the last 4 months. But fortunately, the rand has weakened against the zloty over the last couple of months by 13%. So we won't have over a full year the same rapid decreases we had that in the first 4 months. So we again encouraged and optimistic about Poland.